Hello, and welcome to another edition of the Morgans Edward Street End of Week Wrap for Friday, 28th of July. As we come closer to the end of July, the market can only draw breath only slowly before the reporting season kicks off early next week. A recent pickup in business conditions, coupled with companies cutting costs and consolidating over the past 12 months, should see a few earnings surprises and some solid results. Although the season doesn't really start in earnest till the second week in August, the first week will include companies such as Rio Tinto, ResMed and Suncorp. Rio's enormous cash flow should comfortably exceed the board's stated dividend payout policy that could lead to some form of capital management, and ResMed is coming from a low base from last result and is finally seeing better flow in their accessory supply. Please note that our comments are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the following stock recommendations suit your personal needs and objectives. I'll now pass over to Matt Gordon for his summary. Matt?
Thanks, Brad. A very strong week again for commodities, with copper being the standout this week. Copper is now trading above $2.80 a pound, which is at its highest level since May 2015, on the back of stronger growth expectations for China over the next couple of years. China accounts for roughly half the world's consumption of copper and has been increasing imports of the commodity of late. Cameron will talk about our best way to play the copper theme later on, but in addition to copper, we've also witnessed some strength in the iron ore, nearing $70 a tonne, and gold rising back above $12.60 an ounce. Of course, all these commodities rising have helped push BHP up towards $26 and Rio very close to $66. One of the key topics of this segment has been the Aussie dollar, more so the weakness in the US dollar of late against all major currencies, which has seen our dollar stronger, breaking through the 80-cent barrier and even closing in on 81 cents this week. This has been a near 10% shift in our currency in the space of almost 3 weeks. As mentioned last week, many listed companies on our market will be heavily impacted by this move should the dollar remain above 80 cents. And we are now starting to see this play out on the actual market. A heavy week of reporting stemming from the US with many companies coming in above consensus has seen some good leads from the Dow follow through onto our market, with the index trading just on 5,800 points, probably just a bit below that today. Earlier in the week, we were getting closer to the recent lows, but seem to have shaken off the bears for the moment, leading into our own reporting season next week. One stock we think is well placed for the reporting season is JB Hi-Fi, which has guided for pretty low like-for-like fourth quarter sales, which we think should be beaten comfortably, particularly with the currency tailwind, as they benefit from cheaper imports. Thanks, Brad.
Thanks, Matt. On my left, we have Cameron Mole, who will run through his thoughts on how to best leverage copper. Cam?
Yeah, thanks, Brad. The stock that I'll be looking for investors is Oz Minerals on any share price weakness. Ticker code is OZL. Oz Minerals is an Australian-based mining company, primarily focused on copper. However, it also mines gold. Oz Minerals generates over 3/4 of its revenue from its copper production and is the main focus for my investment. Why do investors need exposure to copper, you may ask? Well, the global middle class is expected to grow by 3 billion people over the next 2 decades, almost exclusively from emerging economies. As the size of the world's middle class continues to grow, demand for things that come with a battery or an electrical cord will continue to surge. That is, these consumers there's 3 C's: comfort, convenience, and communication. Copper plays a huge role in this dynamic that is often underestimated. In addition to the growing middle class, the construction of electric vehicles should be a large contributor to the demand for copper over the coming decades. The construction of an electric vehicle consumes 3 to 4 times the amount of copper in comparison to traditional internal combustion vehicles. Whilst we remain in the early stages of electronic vehicles, you can guarantee that once the technology and trends develop, it will become a race to the finish line for car manufacturers. With any commodity, it's about supply and demand. The current global copper supply has remained a challenging environment, and with the expected increases in demand, we believe Oz Minerals will be a strong beneficiary. We prefer Oz Minerals to competitors based on its copper endowment, strong balance sheet, and excellent cash flow leverage to compelling medium to longer term copper dynamics. Morgans have a bottom of the consensus price target of $8.30, with consensus price targets remaining at $9.50. Thanks, bro.
Thanks, Cam. Well, that wraps up another edition. Please feel free to share this video with any colleagues or friends, and hop onto Facebook and like the Morgans Edward Street stockbroking page. Please contact your advisor for the latest updates and developments during the reporting season. And finally, have a great weekend, and we'll see you again next week.